Welcome back to another roundtable. My name is Adam. With me, Rusmin.
Hello.
Victor.
Hi, everyone.
Thank you so much for joining us today. We're going to talk about SATS and whether it will ever recover. Because SATS at one point was one of the dividend blue chips in Singapore. Very consistent dividends.
Yep.
We're going to find out whether they will ever go back to those days. All right. So before we begin, maybe just a quick context of SATS and the business model.
Okay, SATS, I think they have two businesses. One is the food solution, so and then the other one is the gateway services, right? So to understand food solution is very simple, right? When you take flights out of Singapore, okay, for example, Singapore Airline or NA, right, you're going to engage SATS. Okay, of course, you don't talk to them directly. It's the airline that's dealing with SATS to provide the food in the airline during the flight, right? So that's what they call it, inflight catering, right? So that is where the service is actually provided by the SATS. Even if you go to the lounge, some of the lounges are actually run by SATS, like SATS Lounge, and even some of the Singapore Airlines lounges are actually run by them, right? And yeah, so that's one of their main core business. And in Singapore, they actually dominate about 80% of the market share, right? So most of the airline companies actually engage SATS to provide the foods for during the flights.
So these are flights out of Changi Airport.
Changi Airport.
Okay.
Right? So, and of course in Japan, they also have about 50% market share, right, in both Narita and Haneda airports, right? And of course, and they hold quite a substantial share in other airports like Macau, Taiwan, Vietnam, India, and China. Okay, and these are the aviation food services. They also have non-aviation business that they're trying to grow to make sure they are more resilient because since the pandemic, I think that aviation side has been affected quite badly. So they provide ready-to-eat meals in 7-Eleven, and also sometimes you can find some of the foods on Cheers and also Fair Price, NTUC, right? And they're also trying to run some restaurants, okay? But the main core business still come from the aviation side of the business, and of course the second business they have is the gateway services, where they provide the baggage, cargo handling, but they also provide some of the security services, and they also provide passenger services. So basically, when you land on the airport, right, somebody need to go and bring your luggage from the plane to the gateway, right, to the part where your belt, right? Yeah. So that's where you need someone to handle all the stuff, right?
And the other way is wrong. I mean, when you check in,
same thing.
someone to put it to the plane as well.
Yeah. So that's where SATS actually comes in. I mean, you don't get to see them when you come to the airport, right? So usually you deal directly with the airline, right? But SATS is the guy on the back working very hard, right? And so they are the one that provide all these services.
All right. So that's their food solutions and
gateway services.
Yes. Yeah. The thing about SATS is that it's one of the those resilient. At one point resilient business, very consistent. Because we know airline businesses are not the best investments. Because of oil prices and all that, competitive rates and all that. But we fly all the time. It's not a great business to invest in. But then SATS was like one of those businesses behind the airlines that was like super
resilient,
consistent.
One stock that you want to recommend your mother-in-law.
It's like one of those kind of stocks. And
but then
the pandemic happened and we didn't fly, and all of a sudden SATS had no business. Right. So the share price clearly went down, and then after that it recovered. But now recently, it's been past 3 years past the pandemic, and you look at the share price as of today. We're doing this recording, it's about 263, 260. It's back at pandemic levels. So what's happening with SATS? Everything's opening up. What's happening?
So they did try to announce they tried to acquire WFS, right? Which I think late last year, they when they made the announcement, the share price tanked 21%. And since then, the price has been quite weak. And that actually leads towards recently they have just completed their rights, placement. And usually during the rights exercise, most stocks, most REITs, when they issue the rights, right, the prices will trend towards the exercise price, which is quite low, right? And that has been the case for SATS. And since this completion, I think prices has been continuing to strengthen. I think recently that's what we're actually seeing, but it's still below, I think, $3, right? And at this stage, in fact, at the time this we're calling is about $260. Okay, so so that is one of the main reasons, and of course, second reason is that their core business itself is still not profitable.
Okay.
Right, and we are not even back to the pre-pandemic level in terms of the flight capacity. If you look at the flight capacity in 2022, it's still, I think, 80% below that pre-pandemic, or 20% below the pre-pandemic level. Okay, and even in 2023, I think we are seeing that trading towards that pre-pandemic level. Okay, hopefully, I think a lot of people are expecting that flights will fully recover by 2024 with Chinese passenger flying out and stuff like that. Yeah.
So I mean, to me, it feels like life is back to normal. If I'm flying off again. It's like, but at this point, they're still not profitable.
Yep.
And you're saying they kind of expect profit to return in 2024? Is that what's going to happen?
For their core business, I hope that is the case. But I think we will only see the full implement, because when you say flight fully return in 2024, that doesn't mean that early of the year, right? It could be in the middle of the year, it could be late of the year. And to see the full impact, probably you have to wait until 2025 to see their original core business back to the pre-pandemic level.
All right. Yeah. Has the management said anything about their profit and when they think they would go back to, I guess, normal?
I think they didn't really talk about when they will go back to normal. I think the management is very careful not to give any forward forecast and all this, right? I think the main concern for most investors is actually the WFS deal and also the dividend payment.
All right. Okay. I think I'll just step in, right? Tell us a bit more about WFS for those who don't know. Just really quickly.
Okay. So basically, when they want to acquire WFS, a lot of people are two things that people mention is, first, they overpaid for WFS. Mm-hmm. People think that they overpaid because the air freight rate was very high.
What is WFS?
Worldwide Flight Services.
Okay.
Right? So they basically owns a lot of the assets in different airports, like the Los Angeles and also the Paris and other airports, right? Then they are number 1 or number 2 or maybe rank 3 in certain of the airports. Okay. They are sort of like SATS, but in the western side, right?
Got it.
Yeah.
But so they focus a lot on air cargo.
Air cargo, yeah.
Yeah, okay.
Yeah. So the like I said, the concern is the price they pay and the air freight rate. Okay. So I think we need to talk about the air freight rate first, right? So I think the concern is, I think Bruce Mee have a chart regarding the air freight rate.
Yeah, so originally when they announced to make the acquisition, we did a roundtable discussion on this, right? And I actually raised a concern where, the air freight rate actually has gone up, has doubled or more than tripled or close to triple, right, as compared to the pre-pandemic level, mainly because when the pandemic hits, the supply for the belly space in the airline, right, for airlines, most airline actually has shrunk, and that actually caused the supply to drop. But then there was still a lot of demand. People are shopping online, and this air cargo space actually needed, right? And also on the shipping side, actually there were also a lot of supply chain issue at that time when during the pandemic, when it happens, the shortage of manpower, and there was some ships stuck along some canal, things like that. There was a time those days, right? And because of that, the air freight rate actually has doubled, more than doubled actually, right? And the fact that I think WFS handled mainly the air cargo, I was quite concerned with the rate that they were charging at the time, and it might not be sustainable because they are acquiring WFS at a good time. Okay, when I say good time, means WFS is making record profit, right? And that will normalize once we back to the pre-pandemic level, because the flight capacities are resuming back, more airlines are coming back, because it all this takes time to hire the pilot, to hire the air stewardess and stuff like that, right? So and because of that, I think and also because when they announced the acquisition, the market generally don't like it, because they are going to issue REITs, which again weaken the share price, right? So as a whole, I think this is something that I was quite concerned because of the not back post-pandemic level. I think WFS business may come down.
Okay.
Yeah.
Yep. So that is what most people think about it, right? Yeah. So I was at the EGM regarding the WFS deal, and I think the CEO actually mentioned that SATS, their revenue is not from the air freight, but rather the volume of the cargo, right? So he actually mentioned this, that regardless the tonnage, right, it's always why they're buying WFS is because of scalability. Because regardless, like let's say the tonnage is 100 ton, 200 ton, right, it's always the same driver that pulls the tonnage, right? So that's why the business is scalable. So based on that, it seems like their business is charged based on the volume of managing the cargo and putting up the plane, but it's nothing to do with the air freight rate. So following up, the CEO actually mentioned that if the air freight rate were to drop, right, the volume could increase. It's really going to benefit them. Yeah. Okay. So that's what they mentioned doing that.
Yeah. So after Victor explained this to me, so the way I understand it, I think their business is more like pegged to the volume and the fixed fee that they actually charge to the those airlines.
Because they say that they have contract with their customers, and the customers are usually 90% renewal rate. Right. So every year they renew. So retention rate is 90%, right? So I also asked this question to the management: is what's the normalized EBITDA margin, right? So because I look at the EBITDA margin on the slides over here when they did the acquisition, right? 2018 was like 9%, 2019 was 5%, then 2020 was down 5% because COVID pandemic. Then after that, when the air freight rates were up, right, then on the 2021, right, is 15%.
Record EBITDA.
Yeah. So I asked them what's actually the normalized figure. So they actually said the normalized EBITDA margin is between 9 to 11%. And they say that the 2019 profits as an impairment inside. So that means, right, if you remove it, actually there's a normalized about 9 to 11%. So based on that, right, you look at 2021, right, their valuation is based on the 245 million euro dollar, right, and that is about 15% EBITDA margin. So that is a bit fast stretch. So let's say if we were to be conservative, right, looking at 10% EBITDA margin in between the 9 and 11, that would be about 158 million euros, right, which is about 225 million Sing dollar.
That's assuming the 10% margin.
10% margin.
The CEO guided, right?
Yeah, the CFO guided, right? So based on the acquisition, they actually showed a historical acquisition chart of all those like in the similar industry, right? They say the median was about 9.8, and they say that this deal they bought around 9.7 time, right?
Yeah.
EV/EBITDA. So, but if we were to base on the normalized that I told you, right, that would be around 14 times. So actually, they didn't really pay at a fair deal, I would say.
Okay, still
expensive.
Still expensive.
Yeah.
But not as expensive as we thought previously.
Yeah, because of the unsustainable rate that I was concerned.
Okay.
Yeah.
So they don't really actually directly earn from air freight rates, but it's more the volume of ton of cargo that they move basically.
But I'm pretty sure that they still benefit in one way or another in 2021 because there was a record margin EBITDA of close to 15%. So but then they said normalized is still 10%. So there's still a little bit of benefit. That's why I think based on what Victor has calculated, the EV/EBITDA margin, I mean the valuation that they actually pay for it is actually closer to 14 times instead of 9.7.
Yeah. All right. So that's for the WFS deal.
Yes.
Yep.
All right. So so it's not yet profitable. I think the questions that investors will have is that we're waiting for SATS to become profitable again, because once it's profitable, it's a very predictable business.
Yes.
Very predictable. And when it's a predictable business, dividends are predictable as well.
Yeah.
And if you take a look at its dividend history, SATS has been paying very consistent dividends for 10-15 years.
Yep.
Yeah. They either maintain it or it grows. When do you think they will start paying a dividend again?
I think someone asked during the EGM also, the CFO actually said that now they can't because they are still on government support and the business is still losing money. But the time where they become profitable, they say that there will be a high probability, right? They didn't say it's certain, but they said there will be a high probability that they will start paying dividend at that point of time.
Okay.
Right, so you still have to wait for the business to be profitable, which is likely, since the global air travel is going to recover, right? Likely maybe on the second half of the year or maybe on the first half, depends on how fast everything is back to normal, right?
And of course, Singapore airport dominated being the best airport in the world, that will benefit SATS because when you have more tourists coming to Singapore, right, or flight transiting in Singapore, right, they're gonna engage SATS for their in-flight services, baggage handling and cargo handling and stuff like that, right? So, and then of course Singapore is also looking forward to build Terminal 5, which is I think something that this is before pre-pandemic level, people were very excited about SATS because the runway is there, right? Because Singapore as an aviation hub is solid.
It's still growing.
Right? And I enjoy going to Jewel, right?
It's like nowhere else in the world where people go to the airport to have fun.
Yes.
Only in Singapore.
I love going to Jewel.
You go to Jewel.
My kids also like.
Yeah, I love to go to Jewel.
Isn't it a bit because you're near there? For me, it's a bit far. I mean, but it's an incredible building, and it's part of the airport. So, how would you value SATS at this point? I mean, it's not paying a dividend. It's not yet profitable.
I think we can look at 2 points to really understand what's the normalized earnings, right? So if you look at SATS pre-pandemic, I have a chart here breaking down the food solution and gateway. You can see that the food solution, they are profitable and the gateway are profitable in 2015 to 2020. It's only when 2021 and 2022 that the food solution is negative, but the gateway services are still positive, but the earnings have dropped, right? The net profit, because there's some air cargo or handling business over there, right? So if you look at 2015 to 2020, the average earnings, right, for food solution is about 136.4 million. The gateway average for the same period is about 91.9 million. So you add them both up, roughly about 228 million, right? So let's say if you want to be very, very conservative, I just give a 20% discount. So that's like 80% of that amount. So that's about 182 million. So in the past, SATS have always been paying 80% payout average from that 2015 to 2020. So let's say that amount will work out to have a dividend of 9.7 cents.
Per share.
Divided by the
Okay.
assuming full dilution of
Alright.
the WFS, right?
Okay.
So that will give you about 3.7%. You excluding the WFS earnings,
Okay.
right? Because I assume, because the management said that they want to pay down the debt, so I assume that they're going to use the WFS earnings and pay down the debt.
All right.
Right.
So you're not including any contributions from WFS at
Yes,
this point.
just purely from SATS business recovery, normalized with discount and 80% payout. That will be about 3.7% based on the 2.63 share price, right?
All right. So
that
3.7% yield.
Yes,
Okay.
correct. So that is what you can expect. But how long they're going to reach that, you don't know. If they can reach that in 1 year, that's good. If they reach that in 5 years, then probably not that attractive in terms of the deal, right?
Yeah.
Yeah,
Okay.
be prepared basically to hold, like if you're planning to own share in SATS, then you're not going to get any dividends.
Yeah.
Because it's still a debt to pay down.
I think
Yeah.
one of the great things about dividend stocks is that you get paid to wait. But in this case, you don't get paid.
You don't
Yeah.
get paid.
You're waiting.
Unless they resume it early.
All right.
Yeah.
Yeah.
So let's say we go back to the WFS business, right? So WFS, I already tell you that just it's about 225 million Sing dollar, based on 10% EBITDA margin normalized, right? So but because that's the EBITDA, that's not like net margin. So let's say I assume I discount 20% again to make it sort of like a net margin. So that will be around 180 million plus the SATS business that I give the discount about 182. You add both of them up, it's about 362 million divided by the full dilution, right? That will range about 24 cents. But I won't say 24 cents, but I'll say that probably the range will be between 20 cents to 24 cents, right? So let's say 20 cents at 263 or something, it's about 13 times P. So you're buying 13 times P for sort of like a world number one.
Okay.
As in the biggest player, right? Singapore about 80% market share. The rest of the thing, they are mostly number one, number two. I think quite decent, not the cheap, but decent, right?
Okay. So this is based on PE valuation.
Yes,
Yeah.
right.
All right. So 13 times reasonable.
Reasonable. It's like not
Yeah.
that far, not that overstretched, I'll say.
Alright.
Right.
Yeah, but this is something that you have to be comfortable with because there's still some level of uncertainty.
Yeah.
There's still a bit of
Yeah.
waiting to be done.
And of course, if there's another pandemic, hopefully not.
Hopefully not,
Okay.
yeah.
Then I think SATS will be
Yeah.
in deep trouble.
Yeah.
The valuation part, I think it seems reasonable. Seems like a worthy, I would say worthy bet in terms of risk reward ratios and
Okay.
all this, right?
At this point,
Yeah.
Okay. So, I mean, I think that's how we would value SATS. It's up to you how you want to do it as well. But that's our model based on yield and based on PE.
Yep.
So at this point, it's reasonably valued.
Yep.
But there's still waiting to be done.
Yeah.
It's not back to its best yet.
Yep.
Yeah. I think when the pandemic hit, I think the what was it IATA? IATA, they would say probably 2024 is when everything is going fully back to normal.
Yep.
So I think the only way we can really assess SATS will be 2024, or maybe at the end of 2024. Let me see.
But then I feel that at this juncture, right, the probability of recovery is very high already.
Okay. Because if you wait till then, it
The
could
prices
move.
will-
You
It could
already price
move,
in,
right?
right? Everybody knows the
Yeah.
thing. So how do you create alpha is you must the right time,
Okay.
Yeah.
So it really is up to you whether you like
Yeah.
these kind of investments.
Yes.
Where there's some level of uncertainty, you're comfortable with that, and you
Yeah.
kind of like take a bet in that direction, and maybe it works out.
Yeah.
So again, no recommendation to do anything, but this is how you can take a look at things.
Yep.
When stocks are not at their best. Yeah.
Yep.
So I mean, it's always so easy to buy a stock at when it's good news and everything, but then
Yeah.
everyone knows about that as well.
Yep.
All right. So I hope that was a pretty good update on SATS. Is there anything else, guys?
Nah.
Yeah.
That's a good wrap up. All right, so that's all about SATS. My name is Adam. Rusmin,
Thank you.
Victor, thank you so much for joining us. We hope you enjoyed this roundtable on SATS. Any questions about SATS, put them in the comment section. Any suggestions, put them in the comment section as well. If you like this roundtable, please hit the like button. Tell us we're doing a good job. Of course, subscribe to our roundtable. Many more roundtables coming out. We'd love to see you again. And of course, that's it. So see you around.